Investors have been selectively rotating back into technology names after recent selling pressure tied to worries over stretched AI valuations, which has helped stabilize sentiment and raised expectations of a firmer finish to the year for equities. Get instant alerts on market-moving headlines, analyst reactions, and price-sensitive updates with Investing Pro. Get 55% off today. 1. Asian shares advanced. Equity markets in Asia soared on Monday, extending gains in a holiday-shortened week as technology stocks tracked their U.S. peers higher and investors tentatively returned to risk assets after a recent pullback linked to artificial intelligence valuation concerns. The MSCI AC Asia Pacific climbed 1%, with heavyweight chipmakers Taiwan Semiconductor Manufacturing, NYSE, TSM, and Samsung Electronics, KS 005930, providing much of the upward momentum. Technology-heavy markets in Taiwan and South Korea gained as well, leading gains across the region. Japanese and Hong Kong equities also moved higher, reflecting a broader recovery in risk sentiment. Japan's TOPIX ended the day 0.6% higher. Adding to the momentum, growing interest in Chinese semiconductor companies has fueled a pickup in activity across China and Hong Kong's initial public offerings market, supporting regional equities. 2. More losses for Japan's government bonds. While equities moved higher, Japan's bond market remained under heavy pressure. Government bonds extended losses following the Bank of Japan's decision last Friday to raise its policy rate by 25 basis points to 0.75%, the highest level since 1995. Japan 10-year, which rose 6.9 basis points last week to move above 2%, climbed another 6.4 basis points on Tuesday to around 2.08%, its highest level since 1999. The sell-off has been exacerbated by renewed weakness in the yen, which fell 1.4% against the US dollar on Friday despite the rate hike. Japan's chief currency official Atsushi Mimura said on Tuesday that authorities were deeply concerned by one-directional and sudden currency moves following the policy decision. The weaker yen has fueled speculation that the Bank of Japan may be forced to tighten policy again, adding further pressure to Japanese government bonds. 3. Gold, silver surged to fresh record highs. Commodities were also in focus, with metals leading gains. XAU/USD and silver futures both climbed to record highs amid escalating geopolitical tensions and expectations of further U.S. interest rate cuts. At 9:50 Greenwich Mean Time, gold futures were up 1.3% on the day, exchanging hands at 4.446.30 while silver futures added 2.2%, trading at 68.97. Copper futures also pushed to a fresh all-time high, underscoring strong demand and supply constraints in industrial metals. Crude oil WTI futures prices rose after President Donald Trump intensified a blockade on Venezuela, adding to concerns over supply disruptions. Crude oil futures are up 0.9% on the day. 4. U.S. data in focus. Looking ahead, the economic calendar remains light, though a few U.S. data releases will draw attention. Investors will see a delayed third-quarter GDP reading later in the day, though the data is backward-looking and predates the government shutdown. More relevant for markets will be December consumer confidence figures from the Conference Board, especially after sentiment fell in November to its lowest level since the turmoil surrounding Liberation Day in April. 5. Santa Claus rally or market reversal. With few catalysts on the horizon, some strategists are questioning whether markets are heading for a traditional Santa Claus rally or risk a repeat of past volatility. Deutsche Bank strategist Jim Reed noted that while the pre-Christmas period is often calm, history offers exceptions. In 2018, a convergence of hawkish Federal Reserve messaging, weak global data, U.S.-China trade tensions and a government shutdown triggered a sharp sell-off, with the S&P 500 dropping 7.7%.